Have you ever wondered if you're still covered by your insurance for something that happened years ago, even if the claim comes in today? That's the power of an occurrence-based policy. And in today's episode, we break it all down for you in simple terms. Welcome back to Insurance World TV, the place where we simplify insurance and finance so you can make smarter decisions. Today we're diving deep into occurrence-based insurance, what it means, where it applies, and how it protects you in real life. Let's join in. Question 1. What is an occurrence-based policy? An occurrence-based policy is a type of insurance coverage that protects you from claims resulting from incidents that happen during the period your policy is active, even if the claim is reported much later. In simple terms, if the event that caused the damage happened while your policy was active, you're covered, even if the claim comes in years later. Example: if an incident happened in 2022, but the claim is filed in 2024, you're still covered as long as your policy was active in 2022. Question 2. How does it work? Now, let's take a closer look at how an occurrence-based policy actually works in real life. We'll use a simple timeline to explain. Imagine you purchase an insurance policy that becomes active on January 1st, 2022, and runs through to December 31st, 2022. During that year, you go about your business or daily life, fully covered for any unexpected events. In July 2022, something happens. Let's say someone slips and falls at your business premises. At the time, it seems minor and no one raises a complaint. So life moves on. But fast forward almost 2 years later to March 2024. That same individual experiences complications related to the incident and decides to file a claim. Now, here's the key. Even though your policy expired back in 2022, you are still covered.
How?
Because the incident occurred during the time your policy was active. This is the strength of an occurrence-based policy. It doesn't matter when the claim is filed. It only matters when the event actually happened. Real-life example. Let's bring it closer home with a real-life example, right here in Kenya. Imagine you run a small bakery in Nairobi. Business is good. In September 2023, a customer walks in, buys a cupcake, enjoys it, and leaves. But later that evening, they start to feel unwell. Turns out, the cupcake may have been the cause. Now here's the twist. The customer doesn't file a complaint or claim immediately. In fact, they don't report anything until January 2025, almost a year and a half later. Thankfully, you had an occurrence-based product liability insurance policy that was active in 2023 when they ate the cupcake. So, even though the claim came much later, your insurer still covers it. This kind of coverage is super helpful in industries where problems may not show up immediately, like in food service, construction, healthcare, and hospitality. Question 3. Where is occurrence-based coverage commonly used? So now that we understand how occurrence-based policies work, the next question is, where do we actually use them? These policies are very common in everyday insurance products that many of us already have, or should be having. Let me walk you through them. The first policy is general liability insurance. This one is especially useful for businesses. Let's say someone visits your shop, slips on a wet floor, and gets injured. Even if they file a claim a year later, as long as the accident happened while your policy was active, you're covered. Second policy, homeowners insurance. If you own a home and someone gets hurt on your property, maybe a delivery person falls on your stairs, your occurrence-based homeowners insurance can step in to cover medical or legal costs, even if they sue you months or years later. Third policy, commercial property insurance. This protects business buildings and equipment. If your office gets fire damage during the policy period and the damage leads to a lawsuit or claim later, the insurer still steps in. It's tied to when the event happened, not when the claim is made. Fourth, auto insurance. Many car insurance policies also work on an occurrence basis. If you cause an accident while your cover is active, you're protected, even if the other party decides to sue you away after the incident. Next, product liability insurance. This one is important for people who make or sell things like food, cosmetics, or electronics. If someone uses your product during your coverage period and later claims it harmed them, your insurer handles it. Last but not least, some professional liability policies. Now, for professionals like doctors, lawyers, or engineers, liability policies are a bit trickier. Most are claims made, but in some cases, especially older contracts, you might find occurrence-based versions. Always double-check. So, whether you're running a business, owning a home, or driving on Kenyan roads, chances are you've already come across an occurrence-based policy without even realizing it. Question 4. What are the benefits and drawbacks of occurrence-based coverage? So, let's talk about the big question. What are the benefits and drawbacks of choosing an occurrence-based insurance policy? Let's start with the benefits. Benefit number 1. Long-term peace of mind. Once the policy period is over, you're still covered for any incidents that happen during that time. This means you don't need to stress about renewing the same policy just to be safe. You're protected, even if a claim shows up years later. Number 2. No need for tail coverage. Tail coverage is an extra policy that claims-made policyholders have to buy to keep protection going after their policy ends. With occurrence-based policies, you don't need that. The protection is built in. Number 3. Perfect for businesses where claims can come late. If you're in construction, food service, education, or healthcare, someone might file a claim long after the work is done or the product is sold. This kind of policy protects you from that delayed risk. Now, let's look at drawbacks or limitations to consider. Just like everything in life, occurrence-based insurance policies aren't perfect. While they offer excellent long-term protection, they also come with some important limitations you need to be aware of. 1. Higher upfront premiums. One of the most common drawbacks is the cost. Occurrence-based policies tend to have higher premiums than claims-made policies. Reason? Because you're not just paying for protection today, you're also paying for the possibility that a claim might come years down the line. It's long-term peace of mind, but that peace costs more. 2. Limited availability in some industries. Another issue is availability. Not every profession or industry can easily get an occurrence-based policy. For example, in Kenya and elsewhere, doctors, lawyers, and consultants usually can't get occurrence policies. Their risks are considered too long-term and complex, so insurers prefer claims-made formats for them. 3. Requires excellent record keeping. Here's another big one. You must keep accurate records of what happened during your policy period. Let's say a customer sues you in 2026 for something that happened in 2022. If you can't prove the event happened while your policy was active, your insurer might reject the claim. So always record key details, dates, names, photos, and any incident reports. 4. Harder to switch insurers frequently. Lastly, frequent switching between insurers becomes a little tricky. You might end up with overlapping or missing coverage periods, and that can get confusing when a delayed claim shows up. It's best to work closely with your insurance agent to keep everything in sync when changing providers. So, in summary, yes, occurrence-based policies are powerful, but they aren't for everyone. You'll pay more, need better documentation, and sometimes they just won't be an option in your line of work. But if your risks are the type that might only appear years later, the protection is absolutely worth considering. Question 5. Can it be customized or varied? Now you might be wondering, can you customize or adjust an occurrence-based insurance policy to fit your unique needs? The answer is yes, but with some limitations compared to claims-made policies. First, you can adjust the policy limits. That means deciding the maximum amount your insurer will pay if a claim is made. For example, you might choose to be covered for up to 5 million shillings per incident, or set a lower cap, like 1 million, depending on your business size or budget. This is helpful if you're trying to manage costs while still staying protected. Secondly, retroactive coverage. Some people ask if an occurrence-based policy can be backdated. That's called retroactive coverage. While this is very rare, some insurers might agree to start your coverage from a past date, especially if there's no gap in your previous insurance or if you're switching providers. But it's not guaranteed, and it usually requires special approval. Another way to customize your policy is through exclusions and endorsements. These are like add-ons or edits to your policy. For example, you might exclude intentional acts like fraud or add an endorsement to cover a second location for your business. This helps tailor the policy to your actual risks, so you're not paying for coverage you don't need. Lastly, your premium, that's the amount you pay for the policy, can also be adjusted. Because occurrence-based policies offer lifetime protection for past events, the premiums are generally higher than claims-made policies. But you may get discounts if you have a good claims history or take preventive safety measures. So yes, there are ways to customize an occurrence-based policy, from how much coverage you want to what's included or excluded. Just keep in mind, these policies are a bit more rigid than claims-made ones. Always talk to a trusted insurance advisor to make sure your policy matches your real-world risks. So, here's the bottom line: an occurrence-based insurance policy gives you long-lasting protection. As long as the incident happened while your policy was active, you're covered, no matter when the claim comes in. It's especially useful in situations where problems don't show up right away, like in construction, food service, or even customer-related incidents. This type of policy gives you peace of mind knowing that your past is protected. It might cost a little more, and it may not be for every profession, but for those who need reliable, predictable coverage over the long term, it's a smart choice. Thanks for watching this episode of Insurance World TV, where we make insurance simple, practical, and relevant to your life. If you found this video helpful, give it a thumbs up, leave a comment with your thoughts or questions.